The ultimate investment showdown: stocks versus real estate. What's going on, everyone? It's Keyshawn Brown, and welcome back to the channel. Today, we're diving into the age-old debate: stocks versus real estate. Both offer the potential for incredible wealth, but both come with their own sets of risks and rewards. We'll explore the pros and cons of both to help you make an informed decision. Let's dive in. First up, let's talk about the stock market. When you buy a stock, you're buying a tiny slice of ownership in that company. And as that company grows and becomes more profitable, theoretically, so does the value of your stock. It's like owning a piece of Amazon, Apple, or Tesla, and watching your investment potentially skyrocket as these companies innovate and dominate their respective markets. One of the biggest advantages of investing in the stock market is liquidity. The stock market is like a giant auction with millions of buyers and sellers constantly trading stocks. This high level of liquidity means you can easily buy and sell your stocks whenever you want, which is crucial if you need to access your money quickly. Imagine needing to sell your house in an emergency. It could take months to find a buyer and close the deal. With stocks, you can sell them with a few clicks of a button, giving you unparalleled flexibility. And let's not forget about the potential for high returns. Historically, the stock market has generated an average annual return of around 10%, significantly higher than the average returns for bonds or real estate. While past performance is not indicative of future results, the stock market has consistently trended upwards over the long term, making it an attractive option for investors seeking substantial growth. Another key advantage of stocks is the ease of diversification. Diversification is the name of the game in investing, and the stock market makes it incredibly easy to spread your risk across different companies, industries, and even countries. You can invest in tech giants like Apple and Microsoft, healthcare companies like Johnson & Johnson, and even emerging markets in Asia or South America, all within the same portfolio. This diversification helps mitigate risk by ensuring that even if one investment performs poorly, others can potentially offset those losses. However, it's not all sunshine and rainbows in the stock market. One of the biggest downsides of investing in stocks is volatility. The stock market can be incredibly unpredictable, with prices fluctuating wildly in the short term. One day the market could be soaring, and the next it could be plummeting, driven by factors like economic news, geopolitical events, or even just investor sentiment. This volatility can be nerve-wracking for investors, especially those who are new to the game or have a low risk tolerance. The stock market is inherently risky, and there's always the chance that you could lose money on your investments. Companies can fail, markets can crash, and even the most experienced investors can make bad bets. Despite these risks, the stock market remains an incredibly powerful tool for building wealth over the long term. Remember, the stock market is a marathon, not a sprint, and patience and discipline are key to achieving your financial goals. Now, let's shift gears and talk about real estate. Unlike stocks, which are pieces of paper representing ownership in a company, real estate is a tangible asset. You can touch it, feel it, and even live in it. This tangibility can be comforting for investors who prefer to see and feel their investments, providing a sense of security and stability. One of the biggest draws of real estate is the potential for steady income. When you own rental properties, you can generate passive income through monthly rent payments. This passive income stream can provide financial freedom and security, allowing you to cover your expenses, invest in other assets, or simply enjoy life without relying solely on a 9-to-5 job. And let's not forget about the tax benefits. Real estate comes with a slew of tax advantages, including deductions for mortgage interest, property taxes, and depreciation. These tax breaks can significantly reduce your tax liability, putting more money back in your pocket and boosting your overall returns. Real estate also offers the potential for appreciation. Over time, real estate tends to appreciate in value, especially in desirable locations with strong job markets and population growth. As demand for housing outpaces supply, property values rise, increasing your net worth and potentially generating significant profits when you decide to sell. Another advantage of real estate is the ability to use leverage. When you buy real estate, you can typically finance a significant portion of the purchase price with a mortgage. This leverage allows you to control a large asset with a relatively small down payment, amplifying your potential returns. For example, if you put down 20% on a $500,000 property and it appreciates by 10%, you've just made a 50% return on your initial investment. However, real estate is not without its downsides. One of the biggest drawbacks is the high entry cost. Buying a property requires a significant upfront investment, including a down payment, closing costs, and potential renovation expenses. This high barrier to entry can make it challenging for new investors or those with limited capital to get started in real estate. And unlike stocks, which you can buy and sell with a few clicks, real estate is illiquid. Selling a property can take months or even years, especially in a slow market. This lack of liquidity can be a major disadvantage if you need to access your money quickly or if you're uncomfortable with tying up a significant portion of your capital in a long-term investment. Real estate also comes with ongoing responsibilities. As a landlord, you're responsible for maintaining the property, finding tenants, collecting rent, and dealing with any issues that arise. Despite these challenges, real estate remains a powerful wealth-building tool, offering tangible assets, passive income potential, and significant tax advantages. So there you have it, the ultimate investment showdown, stocks versus real estate. Both stocks and real estate have their unique advantages and disadvantages. Ultimately, the best investment for you depends on your individual financial goals, risk tolerance, and investment timeline. Let us know in the comments which investment you prefer and why. Don't forget to like, subscribe, and hit the notification bell for more financial tips. Until next time, stay informed, invest wisely, and keep building your financial future.